group is willing to go even to the same folks who have forever dinged it. All right, in the meantime, we got market watcher Scott Martin and Rebecca Walser on this so far bumpy start to September. It's very, very early. You know, Scott, to you first on what you make of September. It's always in the eye of the beholder. In the last decade or so, it hasn't been that bad. We tend to think of October as the freakier or scarier month, but how does this one look to you now?
Well, October does have Halloween in it, Neil, so that's one thing. I like September. I got married in September, so I'm usually happy during that month. But I'll tell you, overall, you're right. It's just manipulation with statistics, right? I mean, we had September 11th, unfortunately, in September, you know, a couple decades back, so that was obviously a terrible impact on stocks. So it depends on how you look at it, I agree. But I will tell you, to start the month, it isn't good, Neil, that we're still in kind of square one or space one when it comes to this new refiring of the China trade talks, you know. And the one lead to me so far today, and has been over the last, say, couple weeks, is interest rates. The bond market is telling us that something is wrong. The bond market is telling the Fed they need to cut rates. If you look anywhere on the curve, rates are down. Rates are lower than the Fed funds rate, which is overnight rate, by the way, and it's lower than the 30-year rate on the 10-year bond, and certainly the 30-year bond. So to me, if the Fed doesn't get out there and cut rates soon, I think we're in a whole heap of trouble here on the S&P.
You know, Rebecca, it's interesting. I mean, the market has always been dealing with the pluses and minuses, the ebb and flow of the whole China trade talks. It even took, in relatively, spirited fashion, what's going on in Britain right now, that Boris Johnson could be facing a fight from within his own conservative Tory party. But I do think that what rattled them was what's going on in this country, the manufacturing slowdown that was pretty pronounced, the slowest we've seen back to 3 years, and a sign maybe we're hiccuping a little. What do you think?
I think so, Neil. I think this is the first time, obviously, that we've seen some internal U.S. data that the trade tariff is actually taking effect on our U.S. manufacturing. And so, obviously, the market's going to, you know, we've got a lot. This is an amalgamation of all kinds of factors. A hurricane's going on. It's Labor Day. We had all these businesses closed. We have the Brexit on the verge of, you know, who knows what. And we have escalation of tariffs in September, which is a historically not great month. If you look back 50 years, obviously not the last 10. So, you know, you've got all of these things happening, and investors are just like, my gosh, is there anything that can I look for just 2 seconds and not have some news to actually digest? And so all of those things are going to make this market be volatile for the next 30 to 60 days. Absolutely, we should expect it.
You know, for all of that, if you think about it, Scott, we're only 2 or 3% from all-time highs reached at the end of July for the major market averages. So you could step back and say, it's been an aggressive seesaw, back and forth. But bottom line, not all that far from the record levels. What do you make of that?
Yeah, all this work and we've gone nowhere. You know, the market's been kind of running on the treadmill. And I'll tell you what's interesting, you know, certainly too. I mean, the market, the S&P 500 still up mid-teens on the year, total return. So that's not all bad. Now, if you look back, though, 18 months, we've kind of been here before. We've had a couple of these similar peaks in the S&P around these levels, give or take 50 points or so. And the market has pulled back and then rebounded. So it does go to show you, you're right, when you do have these pullbacks, given that I believe the U.S. consumer, I was out, as Rebecca mentioned, on Labor Day shopping, yes, to my regret. But there was stores full. There were people out shopping, buying things for the kids and so forth. I even bought something for myself for once. So the reality is the consumer's very strong, but still the global economy is kind of weighing down on things, and that's probably why you're going to see the volatility continue here.
You know, consumer confidence is still relatively strong, to his point, and I'm wondering, when you look at that, Rebecca, and the fact that, you know, August was an unusually volatile month with swing. Well, I think 11 trading days of swings of 1% or more. That it was an aberration. Do you buy that August was more of an aberration than it was an indictment on this recovery or this bull market?
I do, Neil. I mean, the true fundamentals for the United States are still there. The bond yields are, you know, depressed long term because people are coming here to the United States, because where else are they going to go? You've got negative interest rates all around the world. People still see the strength of the United States, and, you know, we'll obviously get some employment numbers this coming Friday. So the fundamentals are still there. Consumer confidence is still high, as it should be. And yes, global, trade tension is going to have an impact on us. It's going to come to our shores, but this is the best time to do it. China cannot be allowed to get away with what they've gotten away with for all of these years. This is the president to do it. So is it going to be painful and uncomfortable? As I've said many times, it will be, but this has to be done. And now is the time. This is the market to withstand it. We can't withstand it when we're in an actual recession. So now is the time to do it. And, let's play the long game. Trump is playing a long game. We need everyone to stand and back him, because America cannot win with a China that takes over the world economically, globally.
All right, guys, I want to thank you both very, very much.